My name is Chad Cohen. I'm the Vice President of Sales here at Credibly. And today we're going to be filming another episode of Credibly Explains, where I lay out basic understanding of some different financial terms and options. Today we're going to be discussing the differences between a business loan and a line of credit in the fintech space. There are pluses and minuses of both these products. My job here is just to explain it to you so that you can understand what's the best option for yourself, for your family, and your business. So let's start off with the business loan. First of all, it's a one-time lump sum deposit. Right up front, whatever you sign for, the money will get deposited in your checking account. The benefits: you're going to get a fixed and predictable repayment structure. You repay the principal amount plus interest in regular installments over a set period. You're going to know how frequently you're going to be making payments, what is the term in which you're going to be making those payments, and how much you're going to be in those payments on a daily, weekly, or monthly basis. You'll be able to understand your budgeting, understand how much money is going in and out the door so that you can plan for these expenses. So budgeting is easy. Now, you cannot access more funds without applying for a new loan. So make sure when you're getting a business loan, you're taking enough money to complete the project that you have in mind. You got to remember that you have to be able to afford the payment structure. It is over a certain structured amount of time, and you will be required to make those payments. The business loan is best used for long-term strategic investments, expansion, capital investments into your facility, large inventory purchases, remodeling, all sorts of things that you can do over time to improve your business. So let's talk about the business line of credit. First of all, it is a flexible, revolving financial option. You're given a lump sum of money. However, you do not have to take access to all that money. You pull a certain amount as needed and pay the interest on that amount for the time that you use it. Once you pay it off, the interest stops. So the benefit of the line of credit is that you only pay interest on the amount you actually borrow for the time it takes you to pay it back. So it's good if you're going to take money, pay it off in a short time frame, and then pull money as you need it for short-term cash flow needs. It is an option in which you can take money, pay it back, and then have access to that capital again. This allows you a lot of flexibility in how you use the money that you're provided. The downside on the business line of credit product is that if you do not pay off this money in a certain time frame, it can get pretty expensive as you pay interest on top of interest, thinking you were going to pay it back in a shorter time frame and then not actually doing so. Now, some uses for the short-term line of credit: payroll, where you're just a couple weeks shy and you need to bridge that gap. Or you have a large capital investment or a large inventory purchase and you're just a little short, but you know once you liquidate that inventory, you're going to have the capital you need to pay it back. Now, the major question is how to choose between a business loan or the line of credit. The one thing that is certainly the most important factor in making that decision is what you're actually using the money for. Use of funds is everything. And as a cautionary note, I never recommend taking out money when you do not know exactly what you're going to use the money for and have an applicable use for it that drives your business forward. If you have a long-term strategic play, it is definitely the business loan. You know exactly how much money you need, you find the structure that you're looking for, and then you go ahead and move forward, knowing the payment terms, how long you're going to be making those payments, and how much money you're going to need. On the line of credit product, the needs are different. When you have a short-term cash flow issue, for example, say you need an inventory purchase for the holidays, you know you need a certain amount of money, and you build that into the cost of everything you're doing. You pull the money, you make the money back, and you pay off the line. Maybe there's a seasonal swing that you have to deal with, a slow point in your revenue for a certain time frame. Again, the line of credit can fill the gap on that cash flow issue, and this makes it a really good option for those flexible uses. Credibly does offer something that allows you to take advantage of both of these options, in that Credibly we have a bridge product. What this allows you to do is take out a certain amount of money with fixed terms and understandable rates, just like the business loan product that I explained. If you signed a term for, say, 18 months, and after 2 or 3 you need a little extra money, Credibly you can come, reapply, and get more money rather quickly. We know you, your business, and your payment history, and we're giving you additional money to fill those short-term cash flow gaps while you still have the business loan structure. My name is Chad Cohen. I am the Vice President of Sales here at Credibly. Thank you for listening.